Hello, passive investors, and welcome to Passive Pockets presented by Equity Trust. I'm your host, Chris Lopez. A critical part of investing is knowing who you're investing with. So today, we're going to meet Cole Shephard, the founder of Green Coffee Company. Let's jump into the interview. Hey, Cole, glad to have you on the podcast. Thanks for sitting down and doing the interview with us.
Absolutely, Chris. Glad to be here. Thank you, sir.
Let's jump into it. Before we get into the details, let's talk a little bit about yourself, like why the transition from a successful corporate job to entrepreneurship with a very aggressive goal of taking a company to IPO?
Sure. When I started out of school, about 25, 24 years old, you're starting with PricewaterhouseCoopers, started in the U.S., got the chance to move to Bermuda, work in financial services, moved to Hong Kong, living between Hong Kong and Beijing for about 4 years doing M&A. I was looking to move to the next step, either with PricewaterhouseCoopers or do something entrepreneurial. And what I found is I like doing work in emerging markets. I was more on the entrepreneurial side than what I would say a traditional accounting firm would be looking to have. And so I was interviewing for roles in Latin America and Southeast Asia within the firm to kind of build a partner case. When I came down to Colombia, started checking around, I saw that I thought there was a tremendous amount of opportunity. Country was on the up and up. And I wanted to be a part of that. And, I was about 31 years old at the time, looking to take risk. And I wanted to bet it, if I always told myself if I had an opportunity to do something entrepreneurial, I'd always hate myself afterwards if I didn't do it. So I thought I saw opportunity and I jumped on it, liquidate the retirement accounts, liquidate the current investment accounts and bet it on myself, starting businesses in Colombia for the first time really when I was 31.
Oh, so you cashed and kind of went all in.
Oh, yeah. Yeah, I've been down in Colombia now 10 years.
Respect, man.
Yeah, what I saw, in the worst case scenario, a lot of investors and a lot of people probably on this call would say, what's your downside? The downside is, if at the time was I'd lose my own capital that I invested, but I would become fluent in Spanish, know the market, and then you could always go back and, be a partner at the firm, and you really know what you're talking about. My business was M&A at the time, and entrepreneurial actions and entrepreneurial work would lead directly into being valuable in that field.
I love it. So why Colombia? Why coffee? Kind of how'd you pick, this niche and pick this business model?
Sure. My background at PwC was M&A and financial services. And so what we saw was that all the emerging market deals, all the developing market deals were really won by developed nations. My team was only financial services. So, Hong Kong, London, New York, those are the only people that ran those regions. I saw there was a tremendous amount of activity happening in developed markets. The markets aren't as stable, they're more aggressive, and there's more opportunity within them. And so Colombia was at the top of my list when I was looking at moving within the firm. So I came down my brother got married in Cartagena, which is a beautiful city on the coast. I came down, checked out Bogota, Medellin, and I saw, tremendous economic development, which if you looked on a spreadsheet, our macro report, you wouldn't get that same viewpoint. So when I came down and saw it, I had some contacts in Colombia at the time, and I thought it was a reasonable place to be. There wasn't a lot of people concentrated on it. I'm a contrarian in that viewpoint, is that I like to go where other people really aren't looking. And Colombia really set the bill. So when I came down, I really started in two areas. One was real estate. I looked for arbitrage and real estate deals. And then the second is I started my own little trading house on commodities that I'd set up some companies in Hong Kong. I had relationships in Asia, which are very valuable trade corridor for Latin America because most of the trade corridor really flows between North America and Western Europe. So not a lot of people concentrated on Asia. So I started trading fresh cut flowers. I got into coffee, looked at cacao, and then kind of it developed into the next set of opportunities, which is when we started Green Coffee Company.
So you picked Colombia first, coffee second.
That's correct.
Okay.
Yeah, I kind of fell into it when I was running a trading house for fresh cut flowers. A lot of people don't know that Colombia is the second largest producer of fresh cut flowers in the world besides the Netherlands. So if you go to basically any flower, let's say hydrangeas, roses in the United States, most of that comes from Colombia. That's the biggest provider. And so I was focused on the non-core markets. I set up a trading team to trade Japan, South Korea, Southern China. We did some work in the Philippines and Indonesia. That's aggressive trading. That's a time from the time you cut the plant until the time the thing's dead is 2 to 3 weeks. So when you're trading that overseas, that's about the most aggressive trading platform that you can run due to life cycle of a product.
Oh, yeah, because it's either alive or dead, huh?
That's exactly right. And so then I got into contacts with coffee. That's what Colombia is known for. And then basically giving my background in M&A, private equity, going into institutional investment, that's when I got approached with the opportunity to build the Green Coffee Company.
As a little side note here, I think last week your team sent me a couple of your coffee samples, and I'm drinking your single origin espresso right now.
What do you think?
I enjoyed it a lot. I would buy it again. I think it tastes delicious. And I'm not like a coffee connoisseur, but I know a good cup between a bad cup, and I think it's really good. So thank you for the coffee.
You're very welcome, Chris. Very welcome.
So on that note, as you kind of were, figuring out the opportunities in Colombia, dig a little deeper. Hey, you saw the opportunity in coffee. What were the first kind of couple next steps you did that allowed you to start the company and realize, hey, you have something big here?
We started it really as almost like what you would do, Chris, with syndicated real estate projects. Is we had a group of investors that were looking for agricultural background, right? They were comfortable with Colombia risk exposure. They were already investing in Colombian real estate. And at the time, ag investment for high net worth individuals was kind of a new thing for U.S. investors. And so my mandate really was to go out and target and find a legitimate ag investment in Colombia, and then pitch it to, let's say, high net worth LPs in the U.S. We were kind of, focused in 2 regions. One was cacao, one was coffee. And we chose coffee due to the fact that the most well-known product in Colombia is coffee. It is the national product. And it was the easier sell, honestly, and an easier, way to relate to LPs at the beginning. And it's turned out well. We started as a consolidated ag play, which is really a standard ag play you'd see across standard LPGP deals where you buy farms at scale, you consolidate infrastructure, and then you do as good as you can to maximize the value of that commodity product. And that's really how we started. So it would be similar to, doing a multifamily deal at the beginning. I would say off the bat, we didn't raise a tremendous amount of capital off the bat. We raised a little under $6 million to get started. And then we kind of evolved the business over time where it became more than just an asset play. We realized the ecosystem has a tremendous lack of capital, both human capital and, let's say, fiat capital, and it needed investment in the industry to move to the next level. And so that's, I would say, about 2020, that's when we made that determination and say, let's make this an enterprise play. That's build a large international conglomerate. Let's shoot for an IPO in the U.S. so we can bring in real capital, and let's be a leader in the industry. And that's what we've done. In 8 years, we went from nothing, a cool idea, to being the largest player in one of the largest coffee-producing nations in the world.
So from the 30,000-foot level, what does the team, the overall operations, and the assets look like now at Green Coffee Company? So
to date, we've raised a little over $100 million in equity from basically all high net worth individuals in the U.S. Our asset balance right now is probably about $120 million. We have about $20 million of debt that we have with the local banks here where we get preferential interest rates due to our sustainability initiatives in Colombia. Let's say on the operating side, we have about 400 full-time employees. Now we're just approaching harvest time. It actually started about a week ago. So we will bolt up, another 1,000 to 1,500 part-time, we call them recollection, which are pickers. We still do hand picking in Colombia, which are seasonal workers. And then that'll last until about January, right? And then that's basically the end of the primary harvest here in Colombia. We'll be looking to keep building that out over the next 2 to 3 years when we're looking for a public issuance. And basically what we're doing is we're building a platform that you can both scale within Colombia, a scalable, let's say a circular economy platform, and also a scalable platform in the U.S. Now we represent, what I would say is the most famous Colombian coffee brand in the world, which is Juan Valdez. It's the national brand of the country. We've set up sales teams in Chicago to greatly expand that, which is what you're drinking right now, Chris, that we sent to you. And those two, let's say, feeders will feed off one another. The U.S. demand side will build out. We'll continue to build out supply side in Colombia. And as time goes on, we'll potentially look at other jurisdictions as well, whether that be Central America or coffee developing Africa. We'll see as time goes on.
Okay. I want to pivot the conversation a little bit and kind of talk about the interest you've had from your U.S. LPs. I know a lot of your LPs have been, heavy into real estate. I know you have done some previous, webinars with, left field investors, 4K and passive pockets, and, we're mostly real estate investors. Tell us about the kind of the interest LPs have in general, and also like, why are real estate investors attracted to your deal as well?
Absolutely. Asset management was an industry I focused a lot of time on in Hong Kong. And I kind of used my experience at PwC to build out the capital raise strategy for a green coffee company. And there's two key elements that we found in our asset management studies at PwC, I think that actually resonated really well with U.S. investors. One is no blind pools, right? And so what you'll see in a traditional PE fund is that you invest capital into a manager that you theoretically trust, into somewhat of a wide mandate, and you have no idea what that individual is going to invest into. If you can see the use of capital and say, okay, I want to invest in this, that is very valuable for high net worth investors. That's one key element of what we do. The other is no capital commitments. So as we build the company, we'll do separate capital raises with dedicated uses of capital for equity during the whole course of our 8 years of building this business, and we still do it to this day. So when you invest, there's no obligation to invest in the future, right? So if you wanted to invest on a Series A round and you say, look, let's see how the company does, and you want to invest in a Series C round, or you don't want to invest at all, there's no mandate or requirement legally or otherwise to do so. What we've found is that every time we have a new investment, the existing investors by far are the biggest supporters of that raise. Every single raise we do, every raise, I would say 50 to 75% of the raise in equity in totality is made up from investors who have already invested in our business. To go back to your original question, Chris, of why real estate investors invest in coffee, agriculture is a very similar product set and a very similar, let's say, investment thesis to how you would look at higher level real estate deals. They understand the collateral exposure. They understand how you build up a product. It yields out a cash flow that is readily predictable. And you're not taking, let's say, tech style, AI style risk on a tech build out of a VC company, right? There's basically zero chance you can have 100% loss versus what you would have if you say, okay, I'm going to do 10 angel placements in companies each doing AI with no asset backing to support valuations, support collateral recollection if things doesn't go right. I would say that hammock or that underside of that platform value has always supported the investors, and so since we don't do aggressive tax-style valuations, we have that collateral exposure on the equity. People feel very comfortable in the investment. And also people like the industry. This isn't a very complex business to where it takes a lot of time for high net worth individuals to wrap their heads around it. As you read through our investment materials, you talk to myself, you talk to Adam, you talk to Robbie, who runs our investor relations department. It is a business that people can understand and a business that generally our investors really like. And they want to see us succeed, not only because they want to see a pop on an IPO price, but because they like the product and they think what we're doing is interesting and needed in the market.
That's a very detailed answer. Thank you. And it really resonates with me. You talked about how, like you said about, every time you do your next round of fundraising, about 50 to 70% is repeat customers. That's a trend that, I've seen with successful real estate deals and operators, both when I've structured deals and I've been on there, we usually see about 50 to 60%, kind of like repeat investors. So, to me, that just shows a very satisfied customer. And I think that's a very interesting and a great telltale sign. One question left, Cole. This is a big question, but you're doing two things that absolutely kind of blow my mind as a fellow entrepreneur, right? You're swinging for the fences, taking a company to IPO, and then you're doing this outside the United States. So I'm very curious, the stretch for the goal and what's building a business like that, outside the United States.
I would say my background really was doing deals in both developed and developing markets. I bought banks in Malaysia. We looked at deals in the Middle East at the time. I would spend my time traveling, most on the road when I was working at PricewaterhouseCoopers. I lived in Beijing for a long period of time, and I did a lot of traveling throughout China. I'm very comfortable in those, let's say, developing nation environments. But you do have to get acclimated to how business works there. In Colombia, things are slower than in the US. You need to speak Spanish. When I first came here, I was doing 3-4 hours a day of intense Spanish training at a private university here to get caught up to where you have to be. You can't just, let's say, gringo your life through it and just expect everyone to speak English. You have to adapt to the world around you. And you can't make the market immediately efficient. And you can't get frustrated if it doesn't work the way you want. You need to show up, you need to come correct, and you need to adapt to the world and build your business and your thesis around that. Right. As far as bringing companies to IPO, that's to me is an easier concept to than actually where we were 8 years ago, building it from scratch. What you have to do to get to this stage is far more difficult than building from today to putting a company on a listing on a market. For viewers who haven't done it before, a lot of that is check the box framework exercises to make sure you meet the exchange requirements. You have an iBank rep it, or you do a direct list if you already have transfer agents and whatnot set up. But that part isn't really rocket science. It's more of like a procedural process. It's building a business that people are excited about, that you can actually use a big primary issuance proceeds in a legitimate way, that you have a platform that can really scale, and that you have the support of your investors. You have the support of people in your ecosystem. That's the difficult part. I would say what I do in Colombia, I would never be able to do in the United States. It's just too efficient. So that's why I love the contrarian view of developing markets, because there's so many efficiencies that a lot of people look at Colombia and say, things aren't efficient, so it's a bad market. I think exactly the opposite of saying, if you put in the time, put in the effort, really understand how the market works, build a great international team around you, the world is your oyster. You can build something really special that doesn't exist and be very, very successful in what you're looking to do.
That makes total sense to me, because before I got into real estate, I tried to do stock trading, was not successful at it. The market was too efficient. I was like, real estate, it's an inefficient market, so I can create opportunities. And that analogy you shared makes complete sense with me. Well, Cole, this has been a phenomenal interview. Thank you so much. Appreciate it, and appreciate your time and all the support you're doing with Passive Pockets.
Thank you, Chris.
And that wraps up this operator interview with Cole Shephard. Be sure to check out our YouTube channel and subscribe to our podcast for more great insights in the world of syndications. Thanks for tuning in. As always, happy investing.